So first of all, I'm going to talk about Shell PLC background. So Shell PLC is a British publicly traded multinational oil and gas company. It was founded in 1970 through the merger of the Royal Dutch Petroleum Company of the Netherlands and the Shell Transport and Trading Company of the United Kingdom. The primary business of Shell plc is managing the technical and commercial of a vertically integrated oil company. Shell plc is active in every area of the oil and gas industry, including exploration, production, refining, transport, distribution, and marketing, petrochemicals, power generation, and trading. Shell has operations in over 99 countries, produces around 3.7 million barrels of oil equivalent per day, and has around 44,000 service stations worldwide. Shell plc closes its account at the end of December of every year. As at 31st December 2021, its revenue is $261.5 billion, ranking within the top 10 of the Fortune Global 500 since 2000. The vision of Shell plc is to see global development challenges successfully tackled through the joint engagement of business and society and through the widespread application of business models and business thinking, while the mission of Shell plc is to power progress together with more and cleaner energy solutions. Next, I'm going to talk about the management approach used by the Shell plc. So there are three factors to consider having a segment reporting by each company. So number one is the nature of business activities. So in Shell plc, we have 5 nature. The first one is upstream, where exploring and extracting crude oil, natural gas, and natural gas liquids. Second is oil products, where they turn crude oil and other feedstocks into a range of oil products, which are moved and marketed around the world for domestic, industrial, and transport use. The third one is chemicals, where they operate manufacturing plants and its own marketing network. The fourth one is integrated gas, includes natural gas and liquid exploration and extraction, and the operation of the upstream and downstream infrastructure necessary to deliver gas and liquids to market. The last one is corporate, where it covers the non-operating activities supporting Shell, its self-insurance activities, and its headquarters and central functions. The second factor to consider having a segment reporting is the existing of manager responsible for the activities. So in Shell, each segment is supervised by a segment manager that is responsible in ensuring the segment's performance and maintaining direct communication with the chief operating decision maker. The last factor that should be considered having a segment reporting is information presented to the board of directors. So in Shell plc, all segmented reporting must be consulted regularly with the board to discuss reviews on the business activities and plans of Shell plc.
Shell plc has two types of operating segment, which consists of business segment and geographical segment. As for the business segment is unit of an entity that is engaged in providing product or services. The core business that were run by the Shell plc included integrated gas, upstream segment, downstream segment, and corporate segment. The gas segment, their activities is liquefying natural gas and converting gas to liquid. This is to ensure it can be safely stored and shipped to market around the world. As for the upstream, their activities is exploration for new liquid and natural gas reserves and on developing major new projects. For the downstream segment, their activities is manufacturing, distribution, and marketing activities for oil products and chemicals. It also manufactures and supply include refinery, supply, and shipping of crude oil. As for the corporate, their activities is provide technical services and technology capability covering both upstream and downstream activities. It also providing functional leadership across Shell in the areas of health, safety and environment, and contracting and procurement. Next, Geographical segment. Geographical segment is unit of an entity engaged in providing product or services within a particular economic environment. Shell plc has separated their geography segment based on location and region, which consists of Africa, Asia, Europe, North America, Australia, and Arctic. As for the Africa, their location is on Nigeria. As for the Asia, it included China, Hong Kong, Malaysia, Brunei, Philippines, Singapore, and India. As for the Europe, it's also include Ireland, Nordic countries, United Kingdom, and Russia. And the last one, Arctic. It's also included Cold Oryx, Kodia Island, and Polar Pinery. Next, identify chief of decision making and its responsibility. Chief of decision making is an individual or group of individuals that is responsible for the allocation of resources and assessing the performance of the entity business unit. Each director are obligated to consult with the chief of decision making to discuss, review, and plans for each business activities. As Shell plc adopts single-tier board of directors, all segment directors are obligated to report to the Chief Executive Officer. As you can see, Ben Van Burden is the Chief Executive Officer of Shell plc, and the rest is their Managing Divisional Director. Each segment will be led by Divisional Managing Director with a total of 4 directors. As Shell plc adopts single-tier board of directors, all segment directors are obligated to report to the CEO. According to MFRS 8, decision-making by CODM is essential. This is because the main function is to make decision and allocation of resources based on the performance to ensure that the company obtains profit. The responsibility of their managing director is the chief of decision making mainly controls the operating decisions made by the management committee. It also receives and reviews information about the operating result of individual and group of business units. This set of information will be used by chief of decision making to make decisions and to assess performance. Chief of decision making is responsible for running Shell's business and delivering on its corporate strategy.
Next, we move on to identify the reportable and non-reportable segment. According to MFRS 8, an entity is required to disclose information about a segment separately only if it met the quantity threshold test of 10% and 75% rule. To identify the qualification reportable segment, 10% threshold test consists of 3 methods, which is revenue basis, profit or loss basis, and total asset basis must be certified 10% or more. Meanwhile, the 75% test it will only conducted based on the revenue basis of 10% threshold test to determine whether the segment exceeds 75% or not. For Shell plc, we will use the revenue basis of 10% threshold test as well as 75% test in identifying the operating segment of the company. Revenue basis is conducted by dividing the total reported revenue external and internal over total revenue of all operating segments. Based on the original annual report, however, there are only 3 reportable segments and 1 non-reportable segment after being tested using the 10% threshold test. Therefore, a new adjustment of operating segment will be created as described in the following table. There is an addition of downstream segment in the new operating segment adjustment. After the adjustment, Shell plc will have 4 reportable segments and 2 non-reportable segments. After the calculation of 10% threshold test, the 75% test is conducted by dividing the external revenue of reportable segment, which is 358,635, with the total external revenue for all operating segments. 375,661. The result is 95.27%, which is exceed the 75%. Therefore, the existing reportable segment will be removed and no additional segment should be reported. As shown, new segmental report of Shell plc is reconstructed by using the adjustment of new operating segment. It reproducing 4 reportable segments and 2 non-reportable segments. The 4 reportable segment consists of integrated gas, upstream, downstream, and oil products, whereas the other 2 non-reportable segments are combined and disclosed under all other segments since it does not specify the 10% test. Hence, the adjustment of operating segment by both tests are essential in determining the reportable and non-reportable segment, as well as the preparation of segmental report.
Now, it's time for the conclusion. I will tell you guys about the advantages and disadvantages of segment reporting. The first advantages of segment reporting is shareholder able to gain information about company business and better understanding in the performance of the company. Segmental reporting helps investor and the shareholder know about the business process that they operated by the company and also the background of the company as a whole, which could help them to evaluate company performance as well, whereby they can see each of the segment profitability, risk, growth, and monitor the performance of the company. Next, it's also reduce cost of capital. Risk of investing in equity of a company that disclose complete information is lower compared to company that withhold information. It also will gain rise and trust. This will gain and rise trust from investor because it shows that the company is telling the truth about its financial situation. Next, efficiently in allocating resources. Segment reporting helps the organization determine which segment need additional investment in order to increase the efficiency. This can avoid the company from giving too much attention only to a certain part. Next, I will tell you about the disadvantages of the segment reporting. Even though it has many advantages, however, it also has some disadvantages, which is data manipulation. There is possibility of the data company being manipulated since the upper level has the authority and the power on the company's software data. For example, the leader of the Shell plc might omit certain information in order to make financial statement of the company look good and making profit, even though it might be not true. This is because they want to attract the shareholder and investor to invest into their company. Next, the second disadvantage is potential to expose a company operation to competitor. This is because the study will make the viability of individual segment available to general public. Therefore, the competitor can concentrate more on segments that aren't doing well. It will reveal the weakness of the company. This will lead to the business become lost in competitive advantages.
Assalamualaikum, I'm Nufarsha and I will be explaining what the basis of preparation in the Shell's interim report. Shell's interim report is using the discrete method where the interim report have a separate period or self-standing. It means that the interim report is prepared for the specific period. Interim report is prepared to deliver Shell's performance in terms of financial statement in which we can see an interim report for January until March 2021 and 2022 and also for the subsequent period. Besides that, the interim report is prepared based on a periodic basis which can be prepared quarterly. This can be seen in Shell's interim report that it is made for every 3 months starting from January until March for every financial year.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Iman Kinawi binti Ramli and today I would like to present to you about 2 accounting policies used in preparing the interim report. 2 accounting policies used in preparing Shell's interim report are MFRS 116 Property, Plant and Equipment and MFRS 138 Intangible Asset. MFRS 116, it is defined as assets held by the enterprise to carry out its operation. In this case, Shell use their assets to carry out their operation. For recognition criteria, the PPE can be recognized when it is probable that future economic benefits associated with the item will flow to Shell, and the cost of the item can be reliably measured as stated in the Shell's financial statement. For subsequent measurement, based on MFRS 116, there are two subsequent measurements which are the cost model and revaluation model. By looking at Shell's financial statement, Shell adopted a cost model for subsequent measurement because in the statement of comprehensive income, there is no revaluation reserve stated. This means Shell did not adopt a revaluation model. For depreciation, the oil products manufacturing facility and chemical plants have an estimated useful life of 20 years and retail service stations are 15 years. This PPE will be depreciated over the estimated period before the next planned major inspection, which is 3 to 5 years.
Moving on to the next question, which is to identify any two accounting policies used in preparing the Shell's interim report. Intangible assets is defined as identifiable non-monetary assets without physical substance and not including goodwill. What does it mean by identifiable in intangible assets? It means that intangible asset must be capable of being separated from the company. Also, Shell must have control over the intangible assets, which are the power to obtain benefit flowing from the intangible assets and the power to prevent from other entities from using the benefit of the intangible asset. Next, before the assets are able to be recognized as intangible assets, it must have probable future economic benefit inflow to Shell, and the cost of the intangible asset can be measured reliably. If the asset does not comply with these criteria, it will be either recognized as other types of assets or the cost of the assets will be expensed off in the statement of profit or loss.
Now, let's talk about the types of interim reports prepared by the company. The type of interim reports prepared by Shell is an unaudited condensed set of financial statement which comprises consolidated statement of income, consolidated statement of comprehensive income, condensed consolidated balance sheet, or we can call statement of financial position, consolidated statement of changes in equity, consolidated statement of cash flow, and selected explanatory notes. For the content of interim report, Shell include at minimum, first, headings and subtotal as per latest annual financial statement. Second, basic and diluted earnings per share on face of statement of profit or loss and comprehensive income. Third, selected explanatory report as required by MFRS 134.
In the question form, it is required to identify the period for the current and comparative statement prepared by Shell. For statement of financial position, in the current year, which is 2022, we have to include 3 months, which is from 1st January until 31st March 2022. As we know, the 3 months is the first quarter in the current year. And for the comparative statement, we have to include the full year of statement of financial position, which is from 1st January until 31st December 2021. Different situation for statement of profit or loss and other comprehensive income, where in the current year we have to include the first quarter, which is 1st January until 31st March, but in the 2021 it is different than the statement of financial position, where we have to only include 3 months interim report, comparative interim report, which is from 1st January until 31st March 2021. The same it is also the same situation for statement of changes in equity and also statement of cash flow. Since the current period is only for 3 months, there will be no cumulative period that exceeds more than 3 months. For the comparative interim report, for statement of profit or loss and other comprehensive income, statement of changes in equity, and statement of cash flow. Next adjustment is the valuation changes of property, plant and equipment from cost model to evaluation model. Prior to the changes, property, plant and equipment is valued at cost model, where the amount of PPE is depreciated over its useful life. When these changes occur, previous accumulated depreciation will be derecognized and new depreciation will be charged based on new fair value amount. Useful life of oil products and manufacturing facilities and chemical plants is 20 years, whereby retail service stations will be 15 years. Carrying amount of the PPE as at 31st March 2021 is 208 to 98,000. Changes in the fair value amount as at 1st January 2022 will be 210 billion. These two amounts will be compared to recognize the surplus or deficit on evaluation. Based on the case, the fair value amount of PPE is higher than the current amount, so it will result in surplus on evaluation amounting to 1.702 billion.
Moving on to the adjustment made by the company and the effect before and after adjustment. For MFRS 138, the intangible asset has changed amortization from having definite useful life to indefinite useful life. Under indefinite useful life, the intangible asset should not be amortized. Under indefinite useful life, your useful life must be reviewed annually. If there is any changes, Shell should follow MFRS 108 changes in accounting estimate. And under this indefinite useful life, there is annually test for impairment loss. As you can see here, for statement of income for the first quarter, amortization is under expenses. For 2021, there is 5,896,000 ringgit. But for 2022, there is nil because under indefinite useful life, there is no amortization.